Hi guys, Ben here and welcome to Motivation to Invest. Now, gold has always been a natural hedge for investors during recessions, but in these times it seems as if it's shining even more than normal.
Take a broader example than that. If you buy an ounce of gold today and you hold it 100 years, you can go to it every day and you can coo to it and you can caress it and you can fondle it and 100 years from now, you'll have 1 ounce of gold, and it won't have done anything for you in between. If you buy 100 acres of farmland, it will produce for you every year. You can use that money to buy more farmland. You can do it, all kinds of things. For 100 years, it'll produce things for you, and you still have 100 acres of farmland at the end of the 100 years. You could buy the Dow Jones Industrial Average for 66 at the start of 1900. Gold was then $20. At the end, it was 11,400. But you'd all gotten dividends for 100 years. So a productive asset of any kind, a decent productive asset, is going to kill a non-productive asset over time. Now, in any given 1-year period, 5-year period, any asset can outperform another asset.
Buffett won't touch gold.
Mm-hmm. Okay, yeah.
You think he's wrong? Well, clearly you must.
I think he's making a big mistake. Yeah. Gold is like cash. It's an alternative version of cash. So over long term, it's not the best investment. Over long term, it's a little bit better than cash over long term. It is, however, when you're having a monetary crisis, when you have a fiat monetary system, and you have the need for money, debt is a promise to deliver money.
Right.
So if you look at each of those devaluations that have taken place, March 1933, President Roosevelt closes the banks and then opens them and says you can get your money. And then they broke the link with gold. And so the history over that period of time is that money can be produced. Gold is somewhat limited. It's an effective, it's an alternative that should be part of everybody's portfolio, but not in a big way.
Gold today was something that both Charlie and Warren made pretty clear they're not a big fan of. What about you?
I'm certainly in that camp. Historically, I did have some silver investments that at a time Warren actually had some silver investments. He got out fairly quickly. You know, I stayed in and did very well on silver. But, you know, gold is a very tough one because it's so psychological. And if central banks or the IMF ever decided to take advantage, and I think countries need liquidity. Yeah. You know, hey, there's an asset that's not doing anything for the citizens, and then you know, because it's purely psychological, it's not like people would say, oh, well, when it gets to $800 an ounce, people will buy 4 times as much jewelry. There's no nothing that steps in as a buyer at any price. It's just purely, oh, other people in the future will think it's worth more than it's worth today, which, you know, if you think the world is scary and people are going to panic, I'm not saying that theory doesn't exist, but there is no floor if ever people got a view. And you do, we had a invention session with some people recently. As this price gets high and you look at a 10 to 20 year time frame, the supply equation will change. And so the bulls have to offset the fact that there'll be quite a bit, not in the near term, but over a period of time. And these people are claiming that they can predict, you know, gold prices out into the future, which certainly with equities you can feel like you can. Well, there you have to understand the innovations in digital mining techniques or some new extraction techniques, which actually I think are pretty interesting, and I doubt many people factor that in.
So what do you think about the gold mining stocks right now, and why maybe they're not performing in tandem with the price of gold?
Idiot management. The problem is the management of gold companies can't control their costs. I interview every gold CEO. Yeah. They come into the CBC or they come on the Leary exchange. I ask the same question to all of them. Look, give me one reason I should own your stock and not the gold you mine. Because I show them his chart, I show them the price of gold, and they are ugly. You'd rather own gold. Never own the miner, own the gold.
You think physical gold?
Yeah, well, here's what I do. I own physical gold for 50% of the position, so 2.5% weighting. and I use the GLDs, which are an American U.S. pay or U.S. currency, product, and then I, supposedly own the physical gold that way. But what I like about the GLD is I can trim my weighting every month. So when it gets over 5% weighted, I ping off a few GLDs, or I buy in the GLDs. Right. Physical gold, I go hug at night. Right. I think the thesis that many people are bringing to me now is, why not switch out of gold and the GLDs and buy the miners? They've had the living, you-know-what pounded out of them. Yeah. They're at the lowest valuations vis-a-vis the commodity itself. Right. And I say they're going to go lower.
Wow.
I really do, because there is no reason to own if you look at almost everyone except the royalty ones, their costs keep going up in every case. I say they're mismanaged. I say if a manager can't control his costs, fire him, get somebody else who can. Because if your cost of mining the actual ounce keeps going up, why would I ever buy the stock? What? Give me one reason.
There's no mining CEO you like right now?
Oh, I love them all. I just would never buy their stocks. They're great people.
Right.
But you tell me one reason I should own the common. Give me one reason. Dividends are practically nil across the sector. You have huge operational risks. You've got idiot management on the juniors. Not that they're bad people. I'm just saying the cold, hard truth about investing. If you want exposure to gold, buy the gold. Forget the miners.
What would you tell a single mother to exchange her Berkshire sharehold for gold coins? When, under what circumstance?
Well, I can't imagine ever exchanging any of my shares for gold coins. But, I would rather trust in the intrinsic value of a bunch of really fine businesses run by good managers selling products that people like to buy and have liked to buy for a long time, and them exchanging their future efforts, the money that comes from their wages for See's Candy or Coca-Cola or whatever, than take some piece of metal that people dig out of the ground in South Africa and then put back in the ground at Fort Knox, after transporting it and insuring it and everything. I've never been able to get it real excited about gold. Now, my dad was a huge enthusiast for a gold standard. So, I grew up in a family where gold was revered, if not possessed. And I gave it its full chance, but I've never understood what the intrinsic value of gold is. And we'll sell you some at Borsheim's, but I would never exchange. The idea of exchanging a producing asset for a non-producing asset would be pretty foreign to me.
Kevin, tell me, why do you like gold?
I like gold because, in a way, it's a stabilizer. It's an insurance policy. I listen to all the gold pundits, and they're always wrong as far as I'm concerned. It's impossible to time the moves. I've owned gold for decades, and I simply have a 5% weighting. I look at it quarterly. When it becomes more than 5%, I sell into the strength. And when it weakens, I buy into the weakness. It's just a stabilizer. I'm not one of those guys that's going to go to 40% weighting in gold. Okay. I don't believe the hyperinflation story. It hasn't happened. Gold is popular for a whole host of reasons. Yes. And 5% seems to be enough. It's worked for me in portfolio management. It's the only security I own that doesn't pay a dividend.
So, Kevin, I guess, do you not care if gold goes to $2,000 or $5,000 an ounce? You're still going to buy gold?
Yeah, I don't care. Let it run. I'll be selling into that strength, keeping it at 5% weighting. What I've learned, I'm an old crusty investor. When everybody's saying you got to own it, you should be selling it, because when it corrects, it doesn't touch the sides on the way down. So I simply say 5% is good for me. Some people like a 10, 15% weighting. I'm a 5% guy, and I'm disciplined about it. I hope it runs to 5,000. I don't care. I'll be selling all the way up, keeping it at 5%. And when it corrects back down to 2,000, I'll be buying it in. It's fun. That's the way you should work with gold. Never get so caught up that you take all your dividend-yielding securities that are also a hedge against inflation and put it into a commodity like gold.
Suppose the one time when a single mother might want to own gold compared to anything else is if she faced conditions like a Jew in Vienna in 1939, there are conditions you can imagine where some form of transportable wealth would be useful compared to to anything else. But absent those extreme conditions, I think it's for the birds. Now, silver.
It's hard to think of anything other than fleeing the country.
And how one should actually consider putting gold in one's portfolio. Why do you think gold is now a good bet? Do you think a downturn is inevitable?
Well, first of all, I think every portfolio should have the right amount of diversification in it. And so I'm going to approach the question as both a strategic asset allocation move to put gold in a portfolio, that I believe it always should be a certain part of a portfolio, because there's a certain environment that it diversifies the portfolio well, and a certain environment to worry about. I also think that that environment is riskier, more likely recently now. And that environment is one in which it becomes very difficult to stimulate the economy, and there's a desire to depreciate the value of currencies. Now think about a bond is really the currency. So when one owns a bond or one owns a debt instrument, one is paid a pile of currency over a period of time. When there are a lot of obligations like that, a lot of debt, or even unfunded obligations like pension obligations or healthcare obligations that the world has, a lot of obligations, and there's not an effective monetary policy to lower interest rates and stimulate, as we're talking about, there needs to be the printing of money, the running larger deficits. We're going to come into an environment, I think, in which there are going to be larger deficits that are increasingly monetized. And in that kind of an environment, the currencies are depreciated. That's an easy way to get out of paying your IOUs.
So just to be clear, you're expecting
money.
Things to take a turn for the worst?
I think that in an evolutionary way, over the next 1, 2, and 3 years, that there will be a turn for the worse. Yes, I think that there'll be an environment in which you're going to have excess capacity and debt restructurings and political issues entering into it. I think the elections that we're going to have in the United States will have an important bearing.
In the words of the great investor Ray Dalio, if you don't invest in gold, you don't know history. And I do agree with his thesis up to a point. I believe every investor should have a small portion of gold in their portfolio, at least. Conversely though, I also agree with Warren Buffett in that gold doesn't produce anything, pays no dividend, and is only worth what someone is willing to pay for it. Thus, an equivalent amount of stock for the same price will be worth much more value to me personally. Thus, I only have a small portion of my portfolio in gold. However, I do believe gold is a great hedge in recessions, and thus I may increase my allocation in the future. So how can you invest in gold? Well, you can invest in gold by purchasing gold coins physically or gold bars, but this is time-consuming, laborious, and not practical at all. Instead, I recommend using an ETC fund or exchange-traded commodity. One of my favorites is the iShares Physical Gold ETC. You can find this ETC on many of the free trading apps. I personally invested into it using my Trading 212 account. You can get a free share worth up to £200 or $200 when you sign up for Trading 212. I'll leave that in the link below. Your thoughts on gold as an investment? Let me know in the comments below. I aim to reply to every single comment. And if you enjoyed this video, go ahead, smash that like button and definitely subscribe. See you next time.
Coming in, flex, I just wanna win, LABB who we running with, coming in, flex, I just wanna win,